Good afternoon, ladies and gentlemen. I'm the tall guy standing between you and the drinks later. I'm sorry for that, but I'll try to keep it short as well. First, thank you to the organizers for having us over here today to give a presentation on bank insurance. And I subtitled it, The Pitfalls of Finding the Right Approach to a Lasting Marriage, which is very simple. I don't have anything new to tell, I just have to reiterate some things which we all know but tend to forget when doing business. And the other thing is, when an insurance company tries to get married to a bank, it's almost the same, but still it's a few differences which we should be aware of. I hope it will be interesting, but it will be short for sure. And the good news is, after me, we have a short panel discussion, and the mutual interest is then to go to drinks. Shortly about myself, I live in Ukraine already for 4.5 years. Came here as the CEO of a life insurance company, which was then on-sold to an investor and recently went into the hands of Aegon Life Ukraine. So let me expand a little bit about Aegon as a group before I go into the topic. I'll keep it short. There's plenty of logos around, a little bit about ours. Aegon is a leading life insurance company worldwide, which is focusing on pension, retail and savings solutions. It operates in over 20 markets worldwide as well. And the good thing is it's very profitable and has been for a few years already, when posted a net profit of 1.8 billion last year. It employs 25,000 people, and in the region itself, which is at the next picture, it's present in a coherent portfolio of 7 countries. It started to move to this region in 1992, entering the Hungarian market, and the most recent addition to its portfolio has been, as just mentioned, Ukraine in 2013. 3 other short things about the group itself. Its DNA is about focus and efficiency, and as you can see from these numbers, the earnings grew last year, whereas also the income grew last year, but, and that's the last line for those who can't see it, the operational costs went down with 9.5%. And I think the story in financial institutions, both banks and life insurance, or insurance in general, is about operational excellence and getting costs down, to which our group is a good example. Now, how do we relate to banks? I think life insurance companies and banks are a very good combination, because we have the expertise on real investment products, we have the expertise and the ability for some tax solutions to give your clients long-term savings, whereas you have, very simple in one word, the clients. So working together and bringing together the client perspective and the expertise perspective is exactly what a bank insurance relationship is about. But when saying relationship, it's about long-term. More about that later. These are just a few of the banks we work with worldwide, and I'll expand a little bit later on some specific examples. Our company in Ukraine, we have long-lasting partnerships with a few banks, of which also representatives are here. I'll name but a few: VTB, Crédit Agricole. And it's important also to remember that we are one of the leading players in Ukraine from a non-captive perspective. There are combinations where the bank has exactly the same name as the insurance company. In our case, we have a different name, but we have long-lasting partnerships. Okay, back to the topic. What defines a good relationship, and what's life insurance and bank insurance about? The answer is very simple. You've seen this before, so that's why it's nice to repeat, because we tend to forget. If you look at the first column, it's about the income banks generate from their business portfolios. And as you can see in the, as they call the new frontier states, the smallest part of the income is derived from insurance. Whereas you look at the last column, the biggest part is derived from insurance or fee-based business. So the very distant future for all new frontier markets, and the middle column shows already for Central and Eastern Europe, is the following. For as much as you'd like or try to get income from loans in these kind of markets, we all know it's a dying business in terms of volume. It goes back. Secondly, the competition will go up, so margins will be under pressure. And just before the coffee break, we also learned how important it is to have somebody to take a look at non-performing loans. So basically, there's also problems attached. The obvious trend is that the loan portfolio gets smaller and the fee business gets bigger. Now, we tend to forget that it takes a long-term view to get to this solution. And that's the first pitfall I'd like to mention. Because in dealing with banks, we all look at the same problems, but we don't look at the same future. So the answer is here. This is a repetition of which you will see in any bank insurance conference and what every insurance company will tell you. But the real truth is, it's the truth. Eventually, fee-based income will become bigger. So I would say it's the answer to all the players' needs. Banks need new income sources because we all have our fixed costs. I have offices to run, you have offices to run, and they are expensive, yes. It's more difficult to close them than to open them, and we've been very good at opening offices recently, but the answer is we need to get more yield out of it. Secondly, we all talk about long-term relationships, but a 1.5-year mortgage, or sorry, a 1.5-year consumer loan is not long-term. A 20-year savings program is. The clients want to have solutions for their own financial future, and that's basically where the expertise would come in. And the insurers basically need the access to your clients. So you would say it's a win-win-win. However, and that's the unfortunate truth, or the unpleasant truth, but we all know it's still 2013, what we've seen over the past years in Ukraine, but I think the story goes for other countries as well, is the following. All banks have been cutting costs. All insurance companies, by the way, have done similar things. And the consumer trust is at a historic low. The levels of lending are moderate, especially in Ukraine. We saw some statistics about that earlier. So if I talk to a bank, or if we as an industry talk to banks, we see that people devoted to marketing, people devoted to business development, and people devoted to diversification strategies, most of them have been gone, or they have been put to the defaulting loan department. So the whole dialogue about the issues that matter is more and more difficult. What we also see is that because of those reductions, the dialogue gets more shorter focused, and there is not enough time to look at the previous slide, what will happen in 5 to 10 years. What insurers have done in the same time, and that's a trend visible in Ukraine but also elsewhere, there is consolidation going on, so there will be less and less players to choose from. And secondly, also, of course, in the non-life sector in Ukraine, there's the leading group and the rest. So all discussions with the two industries with each other will be on number 1, costs, number 2, efficiency, but mainly in terms of the dialogue partners on the insurance guide side, there's good news for you. There are less quality players, but they are clearly emerging, and the rest will become more and more the rest. Goes for non-life and life. I don't comment on my competitors. The good thing is about competition, it's present. And the good thing is there's more people to choose from both in this country and in others. But mind you, there's the attractive ones and there's the rest. So that's good news. Now, how to make it work? I'm talking about a partnership or I'm talking about a joint venture. There's 3 things. 1, there are legal barriers for insurance companies to work with banks at times. Local regulation dictates exclusivity is not possible in some markets, or local regulation dictates that the consumer interest should be warranted from all perspectives because the regulator is not able to do it standalone. This is not bad because there are different models. There's the joint venture in which basically the insurance company teams up with the bank, or there's the partnership in which certain partners are chosen. But here's the key point. In a joint venture, which you see classically in some markets, I'll give you one example. In Spain, Aegon just launched with the biggest bank of Spain, Santander, a 25-year exclusivity. Number 1, it's allowed by the law. And number 2, it's a win-win because it's the biggest distribution network and the biggest client base with a top-notch insurance company who is willing to do the things the bank cannot do because, mind you, also in Spain, there's a crisis. 1, we are funding the joint venture, so all the money for development is paid upfront by the insurance company. 2, we take care of the marketing. We take care of the business development, and also we take care of building a winning combination. So if it's allowed by the law, I'd say a joint venture is a very pleasant one, provided, however, you trust each other for the long term. If it's about partnerships, again, at the beginning I said, what are the pitfalls of a long-lasting relationship? We all know how to get happily married, and still some marriages fail. So think about the elements I just met. Do you have the same vision on costs? Do you have the same vision on where the market is going? And 3, did you pick from the right batch of companies your partner? I mentioned earlier is the ones clearly in the lead, and there's the rest. If you have the persons in the lead make clear presentations to what they can do and cannot do for you, then I think you're making the right choice from the right group. Because all companies will say the same, and so do we. And again, this is nothing new. We have a contact center, we have a hotline, We serve our clients, we're on Facebook, we're in social media, we have feedback forms, and you can reach us 24/7. Now the real answer is, do we deliver? Because the biggest failure which we've seen occasionally, is that the ambition level is set very high on general terms, but the execution level is set on the wrong parameters. Number one, nobody wants to pick up the bill to implement all this. We have all been cutting our IT stuff. We've been all cutting on implementation. But this is easy as a concept, but it should work 24/7. Secondly, if you have the same principles on how to serve your clients, then it's a perfect match. But if you don't, then you basically create a problem for yourself. Our call center should not be busy explaining the mistakes the banks make. Vice versa, banks don't want to hear back that the insurance company that has teamed up with doesn't live up to the standards. So please make sure this is a win-win and a specifically designed feature from the beginning. Conceptually nothing new, but there's some issues to remind here. So what are the solutions then? There's basically three segmentations, which is the mass market, affluent, and private banking ones, to which insurance company can give tailor-made solutions. To give you an example on private banking, we have a fund platform operational in Poland with a big leading bank, which we rolled out in Romania with the same bank within a few months because it worked and it was proven. Secondly, also for the affluent group, and that's the challenge to break through both in Russia and Ukraine, but I think in the region, we should go to the saving and investment solutions to make sure that the client relationship is built on the longer term and the expertise which insurance companies have is brought to those banks. On the mass market, we see the same. It's mainly related to consumer lending, and it's mainly related to semi-mandatory life insurance on top of loans. Is there anything wrong with it? No, because the clients need it, and it's a clear need for banks to offer to their clients as well. But what we see there is the following. Main insurance companies are invited every year by main banks to do a tender for another year for the steepest rate possible. We are willing to invest in affluent and private banking, but we want to see a long-lasting future. So the main thing I would like to say to the bankers present here, and I assume since this is a bankers forum, I'm a minority, is the following. If you want our free advice and business development capabilities or IT solutions capabilities for the long term, mind you, that's where the future of the banking industry's profit base is, please don't have us make a ritual dance every year. We're happy to dance with you, maybe even this Thursday evening at the gala event, but I think that for the longer term development of a partnership, it would be better to look at a long-term trust solution. It doesn't mean we have to sign up for years, but it does mean you could look at, for instance, let's get started, let's share the profit, or negotiate so well that we still have to do more than we expect, but you get a lot of things for free on top of what we already pay for. So to conclude my presentation, just a repetition of the arguments I just mentioned. What are the pitfalls for a long-lasting marriage? First one, banks, you are in a very strong negotiation position because the market is difficult for you, so it is for us. So those life insurance companies that want to work are more than ever willing to, but then don't negotiate on price, negotiate on soft benefits. If you want marketing advice, we can give it. If you want expert advice about the future of investment products, we can bring it to you. Even if you want us to motivate your staff with sales campaigns, we can also do it, because that's where life insurance companies or insurance companies have an advantage over banks, because they have their own distribution networks that are already paid for, so the tools are available here. So one, you're in a stronger position than ever. Second, the long-lasting relationships start open-ended. I'll love you forever, but I'll reevaluate next year isn't a good opening. However, if you agree about milestones that should be passed for the future, I think the banks can still leverage on it. We are still willing to invest as long as we also see the long-term future. 3, IT. Keep IT outside, keep our IT outside your building, and we will try to do the same. Because if you see volumes go up rapidly, that's where we create work. And we don't want to create work, we want to create profit sources. So keep the IT separated, but also realize this is the bottleneck of any successful implementation. If it works in a PowerPoint, it doesn't work in your back office right away. So make sure there's a lot of investment in getting the IT departments lined up and teamed up, but let them do their own work separately to avoid confusion. Let insurance companies do the work for you in their core business. We know how to sell pensions. We also know how to sell savings. So it means that we can train your people to do the same in the branches. Even better, we can put our people in your branches. You have the client access, we have the expertise. So please ask for it and negotiate well. Last point is giving access to client data is a win-win. There's always a hesitation about my clients, our clients, the clients. There's hardly any ambition at insurance companies to start a bank, and I've seen not many examples of banks starting a successful insurance company, but it's the same client. So make it more attractive for both sides, as products are complementary and not competing, and as clients also want a share of mind from their personal advisors about other aspects that banks don't offer per se. So together, I think banks and insurance company can create a winning proposition for all stakeholders. The bank will get commission and fee income, the bank will get motivation for its staff, and there's no additional risks other than choosing the right partner. For the clients, it's an additional professional and trusted advice on products they have not seen before, and if the banks become the first movers teaming up with the experts of the industry, I think we can make a good impression there. Lastly, also for employees, we run sales programs, we run incentive programs, we run training programs, and I think in times where the salary in itself is too difficult to keep up with, all the extras you put in for your staff, provided by our staff, is something to maintain and motivate them even more. So back to the long-lasting marriage. I think the trend is clear that the fee income in the industry of the bankers will become bigger. And I also think that there is enough insurance companies lined up to help develop this market. Please do invest and please look at the right partner in choosing it. And I hope we can have a long-lasting marriage in such case. Thank you very much. And I'll hand over to the chairman.